All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today we're going to talk about market manipulation, and then we're going to read some other cool news stuff. So it's a very late video for me, but I was very, very busy today, having a lot of fun, but I came across a few articles on market manipulation, and they were pretty interesting, so I figured I would share them with you. So cryptocurrency market manipulation is rife, but does anybody care? So that's a kind of a good question because we see it all the time in the Bitcoin charts, in crypto charts. Whenever you see a gigantic candle spring up out of nowhere or go down out of nowhere without any kind of reasonable step down from there or step up, typically it's some kind of whale purchase, group purchase, some kind of manipulation. And because cryptocurrency's market cap is so small, while 420 or 30 billion sounds like a lot, it really is small potatoes in the big world. So a few million here or there can really pump the price of currencies, particularly some of the smaller market cap currencies, but Bitcoin just the same. So from pump and dump groups to insider training on esoteric knowledge, market manipulation is rampant within the cryptocurrency space. While some of it is illegal, most of the activity is either legal or quasi-legal, falling into the sea of gray that separates lawful land from unlawful territory. Everyone knows that market manipulation is endemic. The question is, does anybody care? So pump and dump groups in the stock market are illegal. But since cryptocurrency is overall an unregulated currency, an unregulated market, it is not illegal. So I suppose if it was really bad, there may be some legal action, but for the most part, there just isn't. So quasi-legal and legal is probably the better way to say it. So in the beginning, there was Fantas. So traders have been manipulating the cryptocurrency markets since day one. In Bitcoin's earliest days, it and the altcoins that existed on a handful of illiquid exchanges were ripe for pumping and dumping and then pumping again. Coins were won or lost in a heartbeat, which back then were worth buttons. So in hindsight, traders should have just hodled onto those $1 Litecoins, proved to be worth a whole lot more 5 years down the line. Feathercoin and Terracoin, not so much. One trader whose pseudonym was synonymous with pump and dumps back in 2014 was Fontes. Often these schemes would be orchestrated through the troll box on BTCE, an exchange whose attitude to illegal activity was laissez faire, to say the least. I got nothing on that one. I don't know that much. What is that, French? I don't know. So no one knows how much BTC Fontes made from preying on noobs who arrived late to the pumps. He orchestrated with the promise of dropping 1 Bitcoin buy bombs to keep the green candle rising. So like a pump announce, and then a dump announce. A little noob trap there. Phase 2, private pumps. As the cryptocurrency market started to mature, manipulation did not go away. It just went private, moving from public chat boxes to invite-only Slack, Discord, and Telegram groups. The objective was still the same, though, to buy cheap, force a coin to pump, now by spreading fake news about partnerships and other bullish signals, and then dumping at the top. But pump and dumps are only one form of manipulation and are arguably one of the more benign attempts at profiteering. Their effects are short-lived, and any trader who blindly chases a rising candle without understanding why it's rocketing deserves little sympathy. Other attempts at gaming the system are more subtle and are not explicitly illegal, but their effects can be insidious. Examples include a developer who bulk buys a shitcoin and then suggests dual forking it with Bitcoin to inflate the price. A major exchange that tells its cronies about an imminent coin listing, allowing them to secure a position before the masses pile in. Coinbase was allegedly did that with Bitcoin Cash. Bitcoin Cash was supposed to come out, I think, like on the 30th of the month, like sometime last year. What was it, like August or somewhere around there? I don't remember the exact date. But in reality, it actually came out about 10 days early with no warning. It just sort of popped up on Coinbase, and then there was a tweet just saying, hey, we added BCH. Just before BCH was added to Coinbase, there was this huge, huge pump. And you could clearly see it just going up from out of nowhere. And it turned out to be a pretty big fiasco on Coinbase. I was there watching it live, and everybody was buying it, but nobody could sell it. So the price just rocketed to some ridiculous thousands of dollars for a very, very short period of time until that was fixed. So it was quite the debacle. So another one is a whale trading group that secures a discounted private sale allocation and then shills the ICO to the masses to ensure FOMO. So don't hate the trader, hate the game. I like this little meme. This man's market manipulating. See, nobody cares. I always liked good old Jurassic Park. Every second of every day, traders are trying to game the system and steal whatever advantage they can over their peers. Whales creating fake sell walls to psych out the market. Twitter trading. Traders taking positions before shilling a coin as an undiscovered gem. Fudsters fudding, bots buying, wash traders washing. Everyone's at it, and while most people aren't breaking the law in the pursuit of profit, there's a case for saying that manipulation should be simply accepted as part of life. So it's been going on in the world of finance since day one, with insider trading and stock manipulation, some of the oldest tricks in the book. Exchanges such as Bittrex and Robinhood have condemned such behavior, and the CFTC has offered pump and dump whistleblowers a $100K bounty. But given the inability of prosecutors to catch even a fraction of financial lawbreakers, what hope is there of headway in the free and easy world of cryptocurrency? So everyone's at it. A widely shared statement post exposed blatant attempts to manipulate an altcoin, but many who read it demurred with the author's assertion that a crime of the highest order had been perpetrated. I've already contacted the SEC, FBI, and other federal authorities regarding their activities on the market. I have all intentions of making an in-person visit either today or tomorrow to deliver all these screenshots, they vigorously concluded. Some would argue that crypto users crying foul to the three-letter agencies is counterproductive and the last thing the community needs. So, in his recent autobiography, A Higher Loyalty, former FBI Director James Comey recalled his decisions to prosecute Martha Stewart for insider trading when he was Attorney General. The sum the cooking magnate had cashed in was trifling, around $50,000 worth of stocks, but she was prosecuted in the end because there was clear evidence showing that she had benefited from insider trading and later lied about it. Most cases Comey conceded are unprosecutable because it is hard to prove the reason behind someone buying or selling an asset. Offloading a stock just before it dumps could be nothing more than a coincidence. So how to deal with market manipulation? And given the impossibility of eradicating market manipulation, it may be wise to seek a more pragmatic solution. One is for the crypto community to continue publicly condemning such behavior, while in private accepting that nothing could be done about it. The alternative is to embrace manipulation and accept it as part of the cut and thrust of trading. This notion isn't as outlandish as it might sound. Some people believe that doping should be allowed in professional sport because if all athletes dabbled, it would create an even playing field. So who's to say that shilling a coin on Twitter is any more ethical than pumping a coin in a private group or profiting off the inside scoop of Coinbase's next token listing? Ah, there they go, listing Coinbase. When Martha Stewart, excuse me, when Martha Stewart emerged from her short prison sentence in 2005, it was to find that her fortune had increased by 200 million. So ironically, a few months away from trading could be the most profitable thing a crypto investor does. So, not much of a conclusion there, really. It's just more like a, hey, let's kind of just let this happen. But now I'm not sure what to think personally about whales pumping and dumping. I figure that people have more that have more money than I do that would be able to do such a thing. You know, they certainly earned their money, and there's no reason they shouldn't be buying. But that's not necessarily manipulation, just necessarily, you know, like pumping up a coin with your money. Or is it pumping a coin with your money and then having everybody else see that green candle, but then they all pour in on it as well, and then that pushes it up just a little bit more, few hundred dollars more or so with Bitcoin, and then selling and then rinsing and repeating. Because when they see that red candle go down, everybody else is going to sell. It's going to sell below what you just sold it at, and then you'd be able to buy again and do it over and over and over. So how bots are manipulating currency prices. So the cryptocurrency market has grown exponentially. Market cap of 440 billion at the time of writing. So a bot is an automated trader that buys and sells automatically, usually in the short-term market. Because bots are pre-programmed buying and selling without emotion when certain triggers happen, they are historically responsible for dramatic market crashes. The famous 1987 Black Friday Wall Street crash, where equities dropped over 30% in one day, was caused by program trading, the first generation of bots, which sold stocks automatically when they fell below a certain price. Today, bots have become ubiquitous and are certainly not limited to the equities market. In the equities world, some bots, commonly known as high-frequency traders, are in fact welcome because they provide liquidity to normal buyers and sellers of equities. But in the cryptocurrency world, not all bots are created equal, and many are not there to help you. So I don't really use any kind of trading bot. I feel like I can do just fine by myself, but I suppose a really good bot would probably be able to do it a little bit better, but I don't know, I just don't trust some bots. Also, there have been hacks on exchanges through people's APIs by using these bots. I'll tell you another example. So they put the 1987 Black Friday Wall Street crash. Another example was it was maybe just a couple months ago when the Dow was 25 or 26,000, and then it fell 1,700 points in a day and ended that day about 1,100 points down. So what happens is that when when people start selling stocks quickly, it reached its high 25, 26,000. And so everybody was selling off and sort of getting their profits. And because of that, bots start to kick in because they're starting to lose now. They're losing 10% profit or 5%, whatever they're programmed at, and however specifically they're programmed. Then they start kicking in and they start selling off. Then other bots start kicking in, and it becomes a pretty big mess. So bots don't know that this isn't a crash that is occurring. It's really just a short sell-off, and they don't know the difference between that. So they just sell no matter what. So bots and cryptocurrency are a perfect pair. Bots, one's much more advanced than those that caused the 1997 equities crash, infiltrated cryptocurrency nearly as soon as it began picking up steam. They are now prevalent across all cryptocurrency exchanges as individuals with programming skills look to take advantage of an opportunistic situation. An exploding market, a rush of relatively inexperienced investors looking to capitalize on that market, and little government regulation. So case in point, NEO. With Ethereum's 5,800% rise in 2017, investors piled into NEO, which is touted as the Chinese equivalent of Ethereum. And NEO quickly became prime territory for a trading bot to operate and take advantage of overly optimistic and inexperienced investors. So on November 29th, advanced crypto trading platforms began detecting abnormal signals that indicated multiple bots trading on NEO. So the extreme volatility of the market, coupled with dozens of bots trading simultaneously, caused the price to crash within minutes of the first detected signals. NEO went from $34 to $3.74 in a matter of seconds before returning to $34. So investors who bet big lost almost everything within a few bats of an eye. And this kind of flash crash has happened more than once and will likely happen again. And it actually did happen with Ethereum one time. I think somebody sold just an unbelievable amount in a market sell. I think it was years ago on Coinbase or GDAX rather, and brought the price of Ethereum down to very, very extremely low for a very short period of time. So in other cases, bots can manipulate crypto markets by artificially inflating the price. Their automated trading behavior leads new traders in crypto markets to overpay for the coins they are buying. So the classic pump and dump scheme was that was popular in the early 90s. And made famous by the Wolf of Wall Street Jordan Belfort, is still being run effectively by bots in today's crypto markets. So this scheme involves color-coordinated purchases of low-price coin to pump the price and attract new investors who are easily excited by the increase. As investors unknowingly buy the pump, bots dump the asset in near-perfect coordination. With no buyers coming into the market, the coin quickly loses value, and investors are left scratching their heads and agonizing over their wallets. So that's another thing that I would like to mention on real quick is that, you know, you see all these new altcoins popping up. You can go to CoinMarketCap. You can kind of browse through and see them. And when I just do it now, well, after the video. So go to CoinMarketCap and, you know, just go to the next page or a few pages over. It doesn't even matter. Even just scroll down, you know, past the probably top 50-ish coins or so, maybe even to some degree past all of the top 100. you will notice that almost all coins look like a sort of like a dead person's EKG. They're just going straight, and then all of a sudden you'll see this gigantic up and then down and then straight, and that's it. And that's just because, it came out of its ICO, or it just was created, or this, that, or the other thing. It was just mineable, and people bought a ton of it and then sold a ton of it. So it's just the way it goes. And so if you're seeing this big increase in a coin, it doesn't always necessarily mean it's going to keep increasing like that, particularly a very sharp increase. When you see a very sharp increase, then you can kind of tell what's going on. So it can be extremely hard to detect bots are at work without advanced analysis tools. They're easier to spot in hindsight. So take a look at this snapshot of Bitcoin, and you can see the little chunks that the bots are trying to make so that they can buy at a much lower price. Now, this article was written a little while ago when Bitcoin was at $17,000, but it was not that long ago if you think about it. So another way you can really easily spot bots on an exchange is if you see tons of the smallest amount. So, for example, the smallest amount you can trade on Coinbase, I believe, is 0.001 Bitcoin, and you'll see a ton of them. So, like, if you go there and you look at the exchange now, you might see hundreds and hundreds of all those orders, 0.001 Bitcoin, and it'll be at 1,000, and then one will be at 999.99, 999.98, and so on and so on and so on, at 1 penny each. And that's the way the bots read the market. So when the market starts falling, these are selling, or rather these are buying as it goes, and then the bot realizes that the price is going down and it can act accordingly. And then it will also make sales as well for just the smallest amount of Bitcoin it can possibly put on the exchange, every single penny all the way up, just one little bit all the way up. And a lot of bots are doing that too. So sometimes you'll see 0.003 all the way up or something like that, but you could tell when a bot is doing that. And then as it is as those are selling and the price is raising, then the bot knows that it's raising because its little chunks are being sold. They don't know how to read the market by themselves necessarily. It has to be sold or bought for them to realize what position they're at. So altcoins to focus on in the week of April 29th. So, here's some cool altcoins that might, do pretty good this year. But most of these have been around for a while, but there's just something happening with them. So a big forking announcement. I said fork, Zcash Classic, Z Classic, whatever, with Bitcoin, which considered decided to fork Z Classic with Bitcoin. So there's going to be a Zcash, Z Classic. It's so I just want to say Zcash, but then it's not. It's Z Classic. So Classic is currently trading in under $30, a far cry short of the 220 it approached during its prior fork. The price of Zcash Classic is likely to adjust upwards and downwards as the market attempts to predict the value of anonymous Bitcoin. Will masternode technology and anonymity, famous advisors, journalists, and publicists be enabled to strong community and a highly utilized coin? I'm just rambling at this point, but you want to stay, pay attention to the Z Classic fork that might be coming up. So there's a Monero fork as well. Let's see. There actually that already the Monero fork already happened. So Syscoin, higher, some decent coins. This article is a little old. Wait, no, it's only a couple days old. So, if you guys want to take a look at these coins, go ahead. I just figured I'd bring this up real quick and just show you. You never know. So this is kind of interesting, actually. So Venezuela made their own coin called the Petro, which is an oil-backed cryptocurrency. How exactly it works, I'm not really sure because I didn't really look into it all that much. I'm not really interested in it all that much as well. However, it is interesting for the world and how countries can make their own cryptocurrencies and what might happen with those. Now, I'm not a fan of government cryptocurrencies at all. but it is interesting in the news in itself. The reason why I'm not interested in government cryptocurrencies is that the government would be able to track you anywhere you go. I'm just really hiccupy at the moment. Might have been the Coke, the cola. So the reason why is because if a government made a cryptocurrency, you would have to essentially go to a bank and then sign up for it, sign up for some kind of wallet or something like that, some kind of government wallet. So your name, your address, everything would be associated with a cryptocurrency address, and then the government would know exactly what you buy, what you receive, when you receive it, and everything about you. And also the government can make its own amount. It could burn its own amount. It could inflate it, deflate it. It could do anything it wanted with it. So officials from Venezuela offered India a whopping 30% discount on crude oil prices, but the catch is that India has to pay Venezuela, has to buy the petro from Venezuela's own cryptocurrency. So they would actually have to buy it in the petro, essentially. They have to buy the petro from them. So Venezuela is well known for the country's biggest asset, crude oil. In fact, Venezuela is said to have the largest crude oil reserve in the world, which is about 300 billion barrels. Only Saudi Arabia is close to matching Venezuela in this aspect with an estimated 260 billion barrels of crude oil reserve. Although I'm not exactly sure if that is entirely correct or not. I thought Saudi Arabia had like 75% of the entire world's oil supply. I will actually have to look into that. I really like geography, but I'm pretty sure that Saudi Arabia definitely dominates Venezuela. But who knows? There might be a difference between crude oil and all these different oils. I don't know. Nicolas Maduro, the president of Venezuela, seems to be doing anything it takes to make the petro successful. The buzz is that officials from Venezuela are visiting several countries and are offering discounts on crude oil purchases in exchange for buying the nation's very own currency, which is backed by oil. According to several sources, a team of blockchain experts were in India last month and got in touch with Mohit Kalra, the CEO of CoinSecure, which is an Indian-based platform. And they allegedly asked Kalra to include petro as a cryptocurrency in CoinSecure so that they could be traded in for fiat and Bitcoin. And Kalra said they were going to different countries and making offers. The offer that they have given to the Indian government is you buy petro and we give you a 30% discount on oil purchases, which is pretty huge. When you're talking a whole country buying oil from somebody, 30% is massive. That is undercutting the planet, basically. So that's huge. So Kalra also said that they are planning to help Venezuela by providing them with white label exchange solutions. According to this, anyone who wants to trade cryptocurrencies in Venezuela will have to trade on only one particular exchange. The back end of the exchange is set to be managed by CoinSecure. Though the petro is still yet to launch after the Venezuelan presidential elections, rumors have it that the sale has already raised over $3.8 billion. And some say that the petro is all about hype, and so is their ICO. Yeah, you think? I mean, that one's pretty obvious. Lately, Venezuela has been hit by a major financial crisis, which has caused a severe economic downfall, hence the introduction of their own national currency, which is backed by oil. So it seems like a desperate attempt to revive the country from the billions of dollars of debt. Will the petro really fare well in the international crypto market? Only time will tell. So a desperate attempt to revive the country from billions of dollars in debt. I wouldn't call that desperate. I mean, is it desperate? I mean, is that a negative thing to really want to try and turn your country's economy around? I don't really know. I mean, there's a lot of corruption in Venezuela, this, that, and the other thing. But sure, I would like to see it turn around. But again, I'm just not a fan of government cryptocurrencies because of the privacy issue. It would be extreme. I mean, nowadays, I mean, we're losing our privacy every day. But at least I can take a $20 bill, go down the street, and buy whatever I want with it, and nobody would really know. I guess with security cameras, you can really get into it. But for the most part, I can trade somebody a $20 bill for a good or service, and everything would be fine. But if I had a government-issued, let's say basically like a government-issued public key, like a Bitcoin address, where I had to go to the bank and open up a bank account, essentially a wallet, digital wallet account at my bank, and then I'd have to put my social security number, my name, my date of birth, my address, this, that, and the other thing. And then every time I made a transaction with that address, if there was ever anything, if there was ever anything that I did, I could be tracked down super, super quickly. And it's not even that. It's not even necessarily going out and doing illegal things with it and being caught. It's the fact that the government just would know everything at once, and databases would be very, very easy to construct to find out exactly what people are buying, this, that, or the other thing. So this one was interesting. Chinese household in trouble for chasing a lost cause, mining Bitcoin with phones. Mining Bitcoin. So this is not mining cryptocurrency or some altcoin. So a Chinese household has been stealing electricity to mine Bitcoin using 50 mobile phones and 15 improvised mining rigs. I want to know what an improvised mining rig looks like, by the way. Is that just a motherboard with some graphics cards in it? Because that's called a mining rig. But what is an improvised mining rig? Very, very interesting. The home workshop has consumed almost 33,000 kilowatts of unbilled electricity. That should be enough for a couple of Bitcoins. But using a smartphone for the job is not really an option. Stealing kilowatts to mine peanuts. An electric utility company in China has uncovered an illicit mining operation that was simply not worth the risk. A household in the province of Guangdong was caught stealing electricity to power a Bitcoin mining farm at home. So the improvised facility was found by workers from the Maizhou municipal branch, if I'm saying this wrong, Chinese, of the China Southern Power Grid Company. During a routine inspection of the Fengsheng County, they discovered some illegally connected power cables and became suspicious. The cables ran over a back alley to the upper floor of a residential building. They powered 56 mobile phones and 15 homemade mining rigs. Again, what is a homemade mining rig? If I just slap together a motherboard and put GPUs, wouldn't that be homemade anyway? I mean, how is that improvised necessarily? I mean, that's like the definition of a mining rig. Oh well, I digress. So as seen in the photographs posted on the popular Chinese microblogging platform Weibo, according to the comma, the equipment has been used to mint bitcoins. Mining the oldest cryptocurrency is a power-intensive activity. It requires a lot of electricity and needs some serious cooling. Highly specialized hardware handles the enormous number of calculations involved in the processing of Bitcoin transactions. The units capable of doing all that are called ASICs. It is possible to mine many other cryptos with non-dedicated hardware, but then again, powerful graphics GPUs are used. Employing mobile phones to mine Bitcoin with their negligible computing power is not a profitable undertaking. So mining a single Bitcoin consumes an average of 18,000 kilowatts. The proof of work for Bitcoin has burned more than 40 terawatts of electricity in 2017. Processing Ethereum took about 10. The Chinese household, however, didn't pay anything for the electricity consumed by its rigs. That leaves some room for profit if the energy was used to mine some of the altcoins. So, yeah, it's just straight up mining Bitcoin here, but your hash rate on Bitcoin with a phone, even a GPU, is something to be, is something to be, desired. There's no, it doesn't work, let's just say. I mean, you would mine maybe pennies a day with a cell phone, if that. I don't even, maybe. I would actually have to do some a little bit of mining calculation for that, but you would definitely not be mining much. So this person here to spend a ton of electricity, probably to get a bunch of rejected hash rates. So according to their officials from the utility company, the illegal farm was consumed an estimated 32,000 kilowatts of stolen electricity. Chinese police are still investigating the case. The local newspaper reported authorities have not yet named the individuals involved in the illicit crypto mining operation. But Bitcoin mining is still legal in China, so unlike initial coin offerings and trading, crypto mining is not yet considered illegal in China. So some of the world's largest mining facilities are concentrated in power-rich regions and provinces with cooler climates. According to many estimates, up to 80% of the global mining capacity currently resides in China. The status quo, however, may change in the future. Earlier this year, reports suggested that potential energy shortages in the province where the largest mining facilities are located have worried Beijing. Authorities in 2 autonomous regions, Inner Mongolia and the Xinjiang Uyghur, and 2 provinces, Sichuan and Yunnan, received recommendations to restrict electricity supplies to mining farms. Even if the Chinese government decides to ban these operations, Bitcoin mining won't stop. Russia and the other countries, Europe, Canada, Iceland, and the U.S. have received attention as mining destinations that are even competing to attract Chinese miners. So I thought that was just kind of funny. 50 phones. So he could have probably been mining something else. I don't even know if you could do Ethereum. Maybe. There is some coins like maybe Monero would have been better. Electronium, maybe, even though it's just probably 3 cents a coin. I can't even remember what it was. I haven't taken a look at Electronium in a while, but there are definitely better options. Even just some simple Googling probably could have led to some better options of what to mine with your cell phone, as most people just normally wouldn't even bother mining with their phone. One, because it's going to heat up your battery unbelievably, and you need some cooling on them. I think I've seen Samsung actually create some software that you can actually daisy chain old Samsung phones together, and they made this little rack where they racked them all up, and there was a lot of airflow on that rack to keep the cell phones cool. But either way, it's still not a lot. But I hope you guys enjoyed this video, and I will see you guys next time.